If we look at Bitcoin, by the way, it has pulled back off that 30,000 level very slightly, though, trading back at 29,850. All right, so again, we know 30,000 to 30,500 is resistance. That's really all you need to know. Remember, a technical trader doesn't care necessarily whether it's where Bitcoin's going in the next 6 months or 3 months or even 1 month. It's where's the resistance near here where I can tell if it's going to go higher or pull back. And right now you're up into resistance. You're just underneath resistance. Therefore, as a technical trader, you favor a pullback. If it gets through that level, you start to go into neutral. If it stays above that level, you go bullish. It's very simple like that. It's no emotional trading. It's pure and simple. Follow the levels. Let the charts tell you.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway discussing the current state of the crypto market and where Bitcoin is headed in the coming weeks. As of the recording of this video, Bitcoin is sitting just above 29,200, up almost 6% just in the last 5 days. Bitcoin rallied almost 70% in the first 3 months of the year, contradicting expectations for a continued market decline. Soloway suggests that the market needs to break through and stay above the $30,000 level before turning bullish. Soloway also observes the Bitcoin dominance chart, highlighting its consolidation phase, and predicts that the market is due for a pullback. Let's get right into the latest interview with Gareth Soloway as he gives us his prediction for Bitcoin and the crypto market in the coming weeks. Before we dive in, don't forget to hit the like button and subscribe. It's a tremendous help for the growth of the channel and helps us bring you more content just like this.
And this is important. It's not the guaranteed move. There's no such thing in trading. All right, every day I'm out of the money on a trade, or with all the trades I do, there's always a trade. I'm losing here, I'm making money over here and here and here, but there's always going to be a little bit of a loser. So the point is that it's all about probabilities. If you do 10 trades in a day, you want to win 8 of them, and the ones you lose on, you got to recognize quickly that you're losing on them and exit them. That's how you make millions in the markets. You don't make millions so many of these people out there, these newbies, they think, okay, I have a $2,500 account. I got to figure out how to make $25,000 by next week. Not reasonable, because yes, you can bet the farm, make money. Like heck, in 2021, everyone was making money in crypto. Everyone was making money in stocks. That's ultimately not feasible long term. Eventually you pick a bad one, just like anyone, just like I do. Eventually I pick a bad one. And ultimately you go broke when you bet the farm on it. And that's the problem. Make your millions, and you will make millions if you follow the recipe. Technical trading, personal discipline, position size. What we're seeing again here in the markets is a slight up day. We're continuing to grind higher. Bitcoin, again, big pop, but we know we're into resistance here. Let's keep an eye. Look at that, 29,800. That short starting to play out on the BITI by buying BITI, which is short the Bitcoin futures. Let's look at the dollar real quick. The dollar, again, which is adding fuel to the fire today to Bitcoin and the metals, is down. Yesterday, we had a sharp move up on the chart. Today, to the downside. By the way, I ultimately do think the dollar is going to go lower. Doesn't mean it can't bounce in the short term, but I want to show you this trend line here. If we bring up this trend line, look at this. Look at this right here. All right, drag this line out. All right, now you might say, okay, that's support, and you're correct. You are absolutely right. This is support. But the methodology that I teach tells you that the more you hit a trend line, the more likely you are to break down through it. So here you hit it once, 2 times, 3 times, and you're on the verge of 4. Usually by 5, you're in the borderline 50-50 that you could break through it, 50-50 odds. All right, remember, everything I do is probability based, just the nature of it. Is that if you keep hammering on this line, eventually the dollar is going to break down. Okay, when it starts to break down, what is that going to tell us? Well, it fits right in with the narrative that I've been talking about, that we likely see a recession in the second half. Because if we see a recession, what is the market going to factor in? It's going to factor in lighter easing policy by the Federal Reserve, and that ultimately means a weaker dollar, right? Lower interest rates, maybe printing of money down the line. All of that is demoralizing to the dollar. In addition, we can't deny the BRICS and what we're starting to see out there. That's a long-term trade. There's so many. One of the issues with social media is you see all these narratives pop up that are kind of ludicrous in the short term, but maybe have teeth in the long term. And I've been seeing all the demise of the dollar, everyone else is. That's like a long-term narrative that yes, eventually the US dollar will not be the reserve currency of the world. But again, in today's dollars, that's not tradable. Like you'll end up doing a disservice to yourself in my opinion, by pulling out of that scenario and positioning yourself for alternatives. Now, in 5 years, maybe that's a time to start doing that. We'll have to keep an eye on the charts. I'm going to still be here doing some analysis for you guys, I'm sure, in some capacity in 5 years, and I will tell you when I think is the opportune time. All right, so let's look at gold. I want to make sure we check out gold here, see what gold's up to this morning. If we bring up gold on the charts, gold to me continues to be in a sideways consolidation pattern. Ultimately, this is the beginning of bullish consolidation that will lead us through the all-time highs on gold, but I still think you're due for a pullback to around the 1900 to 1915 level. If I zoom out the charts, and this is all charting again, just letting the charts dictate to me. Short term, we're extended. You just need a pullback right in this range, about $100 on gold. Then I think you bounce off of that and you start making new all-time highs. You break through 2100 and you're probably headed towards 2400 by end of year. Now, if we look at silver, same thing, extended. See this downsloping trend line? That's where you're looking to pull back to. That would be a buying opportunity. So again, I remain midterm bullish on gold and silver. Near term, I still think they're a little overbought. They got to work off the recent move. Think about a marathon runner. You just ran a marathon, amazing amount of distance there for those of you that do that, all the credit in the world. But you do need a break, right? You can't just run another marathon right after. You need a break. You need to recharge. So when a chart makes a huge move up or down, it needs consolidation. Consolidation is a runner's break. And that's a way to recharge the battery before continuing its next marathon. So with silver and gold, I think they both go higher, but you probably just need a little bit more downtime after such a big move to the upside. All right, so again, really interesting stuff on that. If we go to the SPY, all right, here's the SPY chart, and I have a lot of little trend lines on this chart from day trading. But bottom line is, what we can clearly see here is that we are gapping up on the spiders. But this is what's interesting to me, right? Is that even with all this good news on earnings, look at the spiders. We're only getting back. This is where we closed yesterday, right here. And this is where we are today. You're only up about $1 on the SPY. Now, part of that is the bank stocks. I saw FRC was still down. Yep, it's still down, folks. So again, that's still under pressure. But the bottom line is, even with the good earnings, you're not seeing a huge impact on the S&P 500. Even on the QQQ, you have Microsoft literally up 10%, one of the biggest companies in the world, the biggest, second biggest probably to Apple in the NASDAQ 100. And the QQQ is only right back to resistance right here. Look at these lows. Look at this. All right, this was a breakdown level yesterday, right here at 313. Guess where we're trading today? Right into resistance. So what does this mean to me? It means to me overall, this market is looking for reasons to sell off in the equity side. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. All right, even though you're seeing a little bit of a bounce here, a lot of that bounce in crypto is a relation to the banking crisis and the safety trade, right? We see the Bitcoin leading the charge. But bottom line is, you're not getting a very oversized move in the QQQ, and that to me would be concerning going over your next couple weeks of trading, especially ahead of the Fed next week, where the Fed is likely going to stay relatively hawkish and hike by 25 basis points. S&P up slightly on the morning session. Watch that Microsoft level, 297 to 300. Appears to 300 today gets me interested on the short side, and then 311. And obviously, we'll keep an eye on all these others, Enphase, heck, Boeing, Visa, CMG. But the bottom line is on ATVI, I don't see anything in terms of a trade until you at least get down to 71 or so.
As China moves towards a digital yuan, Soloway sees it as another reason to own gold and Bitcoin on a long-term basis, as they are assets that can provide a hedge against uncertainty and volatility in the global financial system. Soloway believes that the next sell in Bitcoin may come from issues like an economic recession in the US that could lead to a substantial collapse in the stock market. This could cause panic selling in Bitcoin and other risk assets, as people try to cover margin calls or bring money into their stock portfolios. Soloway continues a long-term bullish stance on Bitcoin and cryptocurrencies in general. He emphasizes the importance of diversification and reinforces the idea that during a banking crisis, the need for cryptocurrency, specifically Bitcoin, is a crucial asset to have. What do you think about Gareth Soloway's prediction for Bitcoin and the crypto market in the coming weeks? And how does this impact countries that hold the US dollar as their reserve currency? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.